Good afternoon, everyone. It's really a pleasure for me to be here at this China Capital Market Conference, and I would like to thank ASIFMA for organizing this event and inviting me to speak. Now, today's conference covers a wide range of topics from opportunities and developments in China's capital markets and key trends like digital transformation, green and sustainable finance. So a pretty full agenda today. As we all know, Hong Kong has always been the hub connecting the mainland and international markets. And currently, Hong Kong intermediates 2/3 of cross-border direct investment and securities investment flows. It's really an exciting time to be discussing how we can further leverage connectivity in China's and Hong Kong's financial markets and explore the key trends for the next stage of China's opening up. China's National 14th Five-Year Plan emphasizes the importance of pursuing a high level of opening up and promoting high-quality development. Despite the challenges presented by the COVID-19 pandemic, China's reform and opening up has continued to deepen. There are continued expansions of the Connect schemes, and foreign ownership limits on security firms and mutual fund companies have been removed. These developments are encouraging and welcomed by the industry. Mainland authorities have reiterated that China will only open the door wider going forward, with Hong Kong continuing to play an indispensable role. Now, effective risk management is increasingly important for participants in China's capital markets, especially with the rising participation of foreign investors. The current volatile market environment presents a very challenging backdrop for investors of renminbi assets, with broadly synchronized monetary tightening across developed and emerging markets, a slower than expected economic recovery in China, a relative currency weakness, and negative yield spread with US rates. Notwithstanding all these, enhancements to connectivity between mainland and international markets continued, particularly in the area of risk management. For example, the Hong Kong EX launched the MSCI China A50 Connect Index Futures in October 2021, which provides investors with a new and effective risk management tool to manage their A-share exposures. In May 2023, Swap Connect was launched, expanding mutual market access between Hong Kong and the mainland into the derivative space, allowing renminbi bond investors to conveniently access the more liquid onshore interest rate swap market to manage related interest rate risk rather than relying on offshore non-deliverable interest rate swaps. As an investor ourselves, in terms of the investment by the exchange fund, we know how important these measures are and how they would enable us to invest even more into the ever-expanding markets. These initiatives, that's why, have been welcomed by the markets and are conducive to closer connectivity between the onshore markets and international investors. And ultimately, they will benefit the high-quality development of onshore financial markets. Now, moving to another key focus for the next stage of China's opening up is green finance market. To achieve its dual carbon strategies, it's estimated that over 100 trillion renminbi will need to be diverted towards carbon reduction, which presents significant climate finance opportunities for foreign investors. As the leading green and sustainable finance hub in Asia and the dominant gateway to China, Hong Kong plays a crucial role in supporting China's climate transition by channeling international capital to green projects. Last year, out of the approximately $28 billion green and sustainable bond issuances in Hong Kong, mainland entities actually accounted for over 80%. Since 2021, we have supported the green, sustainable, and blue bond issuances from the government of the Shenzhen municipality and Hainan province in Hong Kong. This has created a strong demonstrative effect for both public and private sectors in the mainland to leverage Hong Kong's green bond platform and reach the range of RMB financial products available in the Hong Kong markets. Now, Hong Kong is already Asia's largest sustainable financing center, with 1/3 of the market share here. To facilitate further growth in sustainable investment between China and the rest of the world, we have spearheaded several initiatives. First, we are the first Asian jurisdiction mandating climate-related disclosure across the financial sector by 2025, and the first market working to operationalize the common ground taxonomy jointly developed by China and the EU. This allows international issuers and investors to report and communicate sustainability impacts and meet regulatory and investor needs across global markets. Secondly, we have been collaborating with relevant mainland authorities to promote Hong Kong's green financing platform. Together with the Guangzhou branch of the People's Bank of China and Hong Kong EX, we have launched the guideline for mainland corporates to issue green bonds in Hong Kong last year, providing operational guidance for more mainland corporates to issue green bonds in Hong Kong. Thirdly, we have introduced a number of financial support measures, including subsidies and tax incentives, such as a Green and Sustainable Finance Grant Scheme, to cover the issuance and external review costs of green bonds and loans, and concessionary tax treatment on interest income and trading profits derived from eligible debt instruments. Finally, a vibrant and competitive climate finance ecosystem needs to be supported by data, talent, and awareness. So we are working with other regulators and the industry to improve data availability, accessibility, and analytics capability, and nurturing talent through a green finance training scheme and regulator-approved knowledge framework. As a responsible investor and major global asset owner, the Hong Kong Monetary Authority's Exchange Fund has been leading by example by integrating sustainability into our investment strategy and prioritizing green investment over others with a similar long-term risk-return profile. We have been investing in green, social, and sustainability bonds since 2015 and increased the number of ESG-themed mandates in our externally managed portfolios. Additionally, we seek to collaborate with like-minded investors and international organizations to promote ESG standards in the investment process, as well as some special ESG-themed tailor-made mandates in the private markets. Now, given the limited amount of time today, I could only briefly touch on two key themes in the broader opening up of China's capital market. At the HKMA, we are continually working with the mainland authorities and the industry towards new policy breakthroughs to better serve global investors and support the development of onshore markets. In this process, ASIFMA has always been an important partner and industry voice to us. In fact, I just noticed before I came out this morning that ASIFMA has just issued a white paper setting out 149 recommendations for the mainland capital markets. Now, there's a lot of food for thoughts, and certainly we will pick up some of these very pertinent and very practical recommendations. And in our course of our discussion with our counterparties, we certainly will try to provide some impetus to those that would be falling under our purviews. So with that, I would encourage you and warmly welcome your continued views and inputs on ideas as to ways to further strengthen the connectivity between China and Hong Kong's financial markets. Thank you very much, and I wish today's conference a great success. Thank you very much.